This might be the video that you needed to see before you blow another account, especially if you are trading indices. So what I want to go over with you guys is exactly how to use proper risk when you're trading indices like US30, NAS100, and the SP500 as well. Those are the top three indices that I keep my eye on. There's other ones as well that will actually correlate with what I'm going to teach you guys in a second. But before we go into my computer, what I want you guys to do, I need you guys to do this if you support me, is like this video and hit that subscribe button if you have not, and it would mean a lot to me guys. But let's go into my computer. I'll see you guys right now. Okay, I told you guys this on the last video. I told you this in the beginning of this video. If you haven't subscribed to my channel, I need you to do that right now. 90% of you watching this video right now aren't subscribed. And that means that you're going to miss out on a lot of great quality content that I'm making. So hit that subscribe button, guys. So let's get... I said this on my last video. I said this at the beginning of the video, and I'm not going to say this again. You already know what to do at this point in time, guys. But if you don't, there should be a button right around here. So I want to go over exactly how to use proper risk with you guys. Let me move my face over here so it's out of the way. Perfect. Fix my hair real quick. Okay, got the diamonds busting. Alright guys, no more playing around. We're serious now. So I want to show you guys how to use proper risk. So I want to tell you guys right off the bat, a lot of you will probably like have a $500 in your trading account or $50, something like that. You're not going to be able to trade indices with $50. It literally will not let you enter a trade. It will say you need more money, your account balance is too low on MetaTrader 4 when you try and enter a trade. You need at least $1,000 in your trading account to trade indices. Like, you guys just need to do that. You need to have at least $1,000. So obviously the lot sizes that I'm giving you, these rules are with the broker that I use. If you don't have a broker to trade indices, check out the one that I linked in my description. You guys can sign up with that. So with a $1,000 account, you're going to be using a 0.01 lot size. So if you catch 100 pips, you're going to make $10 off that trade right there. So if you catch 1,000 pips, that's $100 right there, which is pretty easy to do. You guys can catch a couple thousand pips trading US30 a week, easy. And that means you're going to be making a couple $100. So for every $1,000 or for every 1,000 pips that you catch on a 0.01, that's $100. Now let's step it up. If you guys have $2,000 in your account, you're going to be using a 0.02. A $3,000 account, a 0.03, a $4,000 account, 0.04, and a $5,000 account, a 0.05. So this is where it kind of gets fun. When you have $5,000 in your trading account, if you catch 100 pips on a 0.05, that's $50. But if you catch 1,000 pips, that's $500. So what if you had the goal, you're like, okay, well my goal is to catch 1,000 pips trading US30 every single week, and you hit that goal. You go for 1,000 pips, no more than 1,000 pips, just 1,000 pips, and you're making $500 a week. That's $2,000 a freaking month that you're going to be making. So you're going to take your account from $5,000 to $7,000 in a month. And obviously you're going to keep increasing your lot size to a 0.07 once you get to a $7,000 account. But hypothetically, you guys really need to think about this. This is why I tell you, use proper risk. It's so important because there might be a day where you're like, do you know what? I'm really feeling this setup. Let me put a 20-cent lot. I know I should be using a 0.07 lot, but let me do a 20-cent lot. And then it goes the wrong way and you just blow your account or do something stupid like that. It's pointless. So use proper risk, because once you get to a higher account balance, you're going to be able to make bigger trades, guys. So 8,000, 0.08, 9,000, 0.09. Now, once you hit $10,000 in your trading account, or if you have $10,000 capital, that is when it's going to get really fun, because when you catch 100 pips, you're going to make $100. If you catch 1,000 pips, you're going to make $1,000. So you guys should be able to do the math for the rest. if you have 20,000, 26,000, maybe 14,000, you guys should be able to do the math with these simple equations right here. So like I said, once you have $10,000 in an account, that's when it starts to get real fun. 100 pips is $100. So here's the hack right here. I want to give you guys this little hack before we end this video. You guys should risk 5% of your account per trade. So obviously some of you might disagree and you're like, Colt, it's 2%, it's 1%. That is fine. Whatever percent you're risking in your account, that is perfectly fine. It's 100% up to you. I think 5% isn't too much, especially if you're a good trader and you have a good risk reward ratio and you're maybe out of 10 trades that you take, 8 of them are profitable trades, you're good with 5%. Because if you're risking 5%, that means if we're doing a 2-to-1 risk reward ratio, we want to be making 10% per trade, which is pretty damn good. So if you have 10 bands in your account, 10% of that is $1,000. If you're doing $1,000 per trade, boom, you're freaking Gucci. So if you have a smaller stop loss in your risk, aka your lot size, your lot size can be bigger. So here's an example. If you have a 200 pip stop loss with $10,000 in your trading account, you can do a 0.20 lot size, a 20-cent lot. Your loss would be $400, which is 4% of your account size. So if you're doing a 20-cent lot and you're risking 4%, $400, let's double that up. We want to go for 8% or even more than that. So if you're going for your losses, hypothetically, if you lose, it's going to be $400. That's not too bad off $10,000. That's 4%. And then you're going for, let's say we want to go for 10%. If you're using a 20-cent lot size for 10%, well, if you're using a 20-cent lot size and you're going for 10%, yeah, that'd be $2,000 potentially on the line right there. So that's a lot of money. You have to think in lot sizes, not the account size. You're thinking in lot sizes, not percentages of the account, but percentages of the lot size. So if you catch 20 cents on 1,000 pips right there, that's $2,000 that you're going to be banking. I know what I just said was super confusing, but that's how I cleared it up right now, guys. So you're using a 20-cent lot size and you're going for 1,000 pips. That's $2,000 potential on the line right there. So that's a little hack. Keep that in mind. Obviously, it's going to differentiate from the lot size that you're using, the stop loss that you have, the percentages you're risking. All that takes a big toll into when you're going into a trade. But overall, what I want to end this with and summarize is using lot size is very important. And if you don't use proper risk, like I cannot tell you how many times. I'm going to tell you a story one time. So it was about 3 years ago. I had a $5,000 account. I was trading Bitcoin, and I took that $5,000 account to $10,000 in 2 days trading Bitcoin, and I was stoked. And I felt like I was God. I thought I was on top of the world, and I was like, you know what? Like, I'm going to win again. And I didn't have a stop loss. I over leveraged my account, and I lost a whole $10,000 overnight. I woke up the next morning. I thought it was an error with my broker, and it's so funny because I even tried to email the broker. I was like, this is a mistake. I didn't enter those trades. I had a stop loss. Like, I was so bummed out, but I wanted to cry when I lost that $10,000, and it all occurred because I didn't use proper risk. I was stupid, and I don't want you guys to have that same feeling of regret and remorse. And it's gonna happen. Like, it has to happen to some of you, but at the end of the day, use proper risk, guys. I cannot tell you how important it is, but appreciate you guys all coming on this video. I actually kind of burped at the end of the video, but appreciate you guys all coming on this video. See you on the next one. Peace out.